Welcome in, everyone. As we kick off December 2025, the global markets are caught in this massive economic tug of war. On one end of the rope, you've got forces pushing for growth. On the other, forces pulling towards a slowdown. So today, we're going to untangle this whole thing and figure out what on earth is going on. And I mean, the signals couldn't be more confusing right now. It's like the market has a split personality. We're seeing investors dump risky assets, which is classic run-for-the-hills behavior, but at the same time, they're piling into traditional safe havens. It's a total paradox, and it has a lot of people scratching their heads.
You want a clear sign of this nervousness? Just look at Bitcoin. You know, it's one of those classic risk-on assets. People buy it when they're feeling good about the economy and are willing to gamble a little. Well, right now, that barometer is pointing straight down, with a really sharp drop. That screams fear.
And look, this isn't just a crypto story. That chill has spread right into the broader stock market. The S&P 500, the big one, tracking 500 of the largest U.S. companies, also started the month in the red. This tells us the anxiety is pretty widespread. It's affecting the big guys, too. But here's where it gets really weird. At the exact same time that people are fleeing risk, they are sprinting towards gold, the ultimate safety net. It just surged to a mind-blowing record high. Now, this isn't just a mixed signal, it's a flat-out contradiction. How can the market be so scared and so cautious at the same time? Right. This is what the pros call a risk-off environment. Investors are way more worried about protecting their money than they are about making big gains. And as this Schwab update points out, the crypto dive and worries about interest rates are the big drivers. But it's that second part, the interest rates, that's really the heart of this global puzzle. Which brings us right to the main event for this explainer. What is the real story here? Why are investors running for cover and bracing for impact all at once?
Well, the answer really boils down to one of the most powerful forces in the economy, central banks. The thing is, right now, the world's most important ones aren't on the same page. In fact, they're pulling in completely opposite directions.
This right here, this slide captures the whole tug of war perfectly. Over in the US, the Federal Reserve is getting ready to cut interest rates to try and give the economy a little juice. But on the other side of the world, in Japan, their central bank is about to raise rates for the first time in forever to try and cool things down. These completely opposite moves are creating massive waves in the global system, and nobody's quite sure where it all leads. There's a name for this. It's called monetary divergence. And trust me, it's a huge deal. When the world's economic heavyweights are on totally different paths, it creates ripples that affect everything. Think currency values, your investments, all of it. It's like two giant ships passing in the night, just creating this turbulent wake that everybody else has to navigate. So as if that monetary tug of war wasn't enough to deal with, there's another major factor throwing gasoline on the fire: geopolitical risk. From Eastern Europe to the Middle East, this steady drumbeat of conflict is adding a very real, very measurable cost to the global economy. And it's not just one thing. It's been this cascade of crises, one after another. You've got the war in Ukraine, the attacks in the Red Sea, rising tensions in the Middle East. It has created a perfect storm of instability. And all while OPEC Plus is keeping a tight lid on supply. So every new headline just adds another layer of risk to an already shaky system. We can actually put a price tag on this fear. Analysts figure that just the shipping problems in the Red Sea have added what they call a risk premium of $2 to $4 to every single barrel of oil. That's basically a direct tax on the global economy, a cost of instability that we all eventually end up paying. All right, so this global mess is making the Fed's job here in the US incredibly difficult. They want to cut rates, but to do that, they need a clear picture of what's happening. The problem is they're flying through a thick data fog with conflicting signals coming from everywhere. This is the million-dollar question for policymakers and investors right now. The economic data is so contradictory, it's almost impossible to get a clean read. Is the US economy about to slow down, or is it still running hot? The answer you get depends on who you ask. This table is the perfect illustration of that data fog. The Atlanta Fed's model, which is a big one they watch, is forecasting pretty strong 3.9% growth. But then, you look at a big survey of economists and they're way more subdued, thinking it's closer to 3%. That gap might not sound like much, but in economic terms, it's massive. It's exactly this kind of confusion that makes it so hard for the Fed to make a move. So, why all the confusion? Well, a big part of it is that a record breaking government shutdown has delayed a bunch of crucial economic reports, the really important stuff on inflation and jobs. Without that data, the Fed is basically trying to fly the plane in the dark, which makes their next decision a real nail biter.
So, how are investors reacting to all this? Well, they're voting with their money. This chart shows a classic move called sector rotation. You see money pouring out of those high growth stocks and rushing into more stable, defensive areas like healthcare, which is up a whopping 13% this quarter. That is a crystal clear sign that investors are battening down the hatches, getting ready for a potential storm.
Okay, so with all these powerful forces pulling the market every which way, which should you actually be watching to make sense of what happens next?
Here are the big ones to circle on your calendar. First up, the Fed's decision on December 10th. Huge. Then, all eyes shift to the Bank of Japan on the 19th. And in between all that, we'll be desperately looking for new U.S. inflation data and watching for any new geopolitical headlines. These are the things that are going to decide which side wins this economic tug of war as we head into the new year.
So, what's the big takeaway here? Well, we're in a new kind of economic world, one where the major powers are just not moving in sync anymore. And this divergence, when you combine it with all the geopolitical instability, is just creating a more volatile, more unpredictable world for everyone. It leaves us with a really tough question. In a world where the old economic roadmaps don't seem to apply, how do you find your footing?